The second round of a GameStop mania, it says here, has some wondering how they can, or actually how it can or should capitalize on the renewed investor interest that sent the stock up nearly 150% last week. Joining us now, George Cladonis, a partner at law firm Latham & Watkins, specializing in assisting financially troubled companies. George, have you been scratching your head about why they haven't sold stock yet?
Yeah, good morning, and thanks for having me on. It's funny, we sit here today, in my world, the restructuring people, and we look at companies like GameStop, AMC, BlackBerry, even Blockbuster. These are a lot of names that got traded and were traded pretty significantly the past few months. And we do sit here scratching our heads wondering what happened and how is it that these companies are trading so high, especially from an equity perspective. One good example, which is sort of a good comparison, is AMC. AMC has taken advantage of a lot of the tools in its toolkit out there. It did go out and raise capital. It went out and did what it had to do from an operational perspective and push through during the pandemic. And it seems like, at least for to make it on the other side.
You make some points, and in fact, you reminded me of something that I think may have been a foreshadowing to what we've seen, and I forgot about Hertz and that crazy situation where they were going to, in bankruptcy, issue some stock, and it basically looked like it was going to be worthless, and yet it was bid up, and that's the same type of irrational move that we see sometimes that doesn't seem to be grounded in anything. But my question to you didn't really answer with GameStop. Why not, if you are that company, don't even question what's happening, just take advantage of it? Why haven't they?
Yeah, look, it's interesting because if you look at what they've done the past few months, and maybe this is what the Reddit people are looking at, they have made a number of changes, right? They definitely went out and issued new stock. I believe their CFO is being replaced in the near term. They are going on a digital first kind of thesis right now and trying to change their operations. Look, they do have a bunch. They have 5,500 stores, and I do think that there is a chance that they're looking at the capital markets and trying to figure out a way to push through this and take advantage.
Well, if they came to you, and I'm not going to send you a check for you to tell us what you would want to do, and I know you guys never say anything if you're not billing by the hour, but if they did come to you, what do you think Latham & Watkins would tell them about right now to start doing?
It's kind of what you said. It's go out there and take advantage of the capital markets and take advantage of the energy that you have right now, and see if there or financing that you can raise to deal with 2021 maturities out there. There are, I think, tools in the toolkit that we can look at in their credit agreements that they do. But yeah, I mean, it's basically the AMC playbook, which seems like they're not sitting back doing nothing. They are thinking about what to do next.
George, would they need another firm, a strategy firm, to actually help them with their business plan in the future, or would you get involved there? And if you would get involved there, what you mentioned just sort of generally that becoming more digital with their stores, but what else would you have the company do? Our own Jim Cramer has some ideas he suggested. It involve a lot of different scenarios. What do you think Latham would tell them?
Yeah, I think in order to have a holistic approach to how to take advantage of what's happening and deal with whatever, there are a couple of things. A, from the legal perspective, again, credit agreement docs and get access to the capital markets and get creative solutions. Bankers are great. Obviously, investment bankers are another way of going out and accessing capital markets to figure out what the best sort of piece of paper out there exists to help them either refinance their debt or take down some of their debt. And from an operational perspective, which you touched on, there are a lot of financial advisors out there to try to right-size real estate portfolio companies because, as I said earlier, there are 5,500 stores, I believe, which is kind of a big number considering what's going on in our climate today with malls and brick and mortar. So those are the three I would say that are tools in their toolkit in terms of advisors that they can pull together and help out.
Shepard Smith here. Thanks for watching CNBC on YouTube.